Welcome back to Candlestick Signals for today's market, September 4th, 2025. Brace yourselves for a roller coaster ride through the world of candlesticks as we uncover the hidden signals that could make or break your trading strategy. From hanging men to engulfing patterns, we're about to dive deep into the technical setups that are shaping today's market sentiment. So, buckle up and get ready for a thrilling journey through the peaks and valleys of Wall Street. Our analysis begins with a mixed opening across U.S. indices following yesterday's positive session. The S&P 500 rose 0.5%, while the Nasdaq gained an impressive 1%. However, the Dow Jones Industrial Average slipped 0.1%, showing some hesitation in the market. Global markets trended higher, but there's a palpable sense of caution as traders await crucial labor data and other macroeconomic catalysts. Index futures are pointing to slightly higher opens for both the S&P 500 and Nasdaq, setting the stage for an intriguing day of trading. Now let's delve into the candlestick structures that dominated today's trading landscape. The most prevalent pattern we observed was the hanging man. With a staggering 787 appearances across various sectors, this pattern is primarily a warning sign in uptrends, suggesting that we might be approaching overbought territory in several key areas of the market. The hanging man was particularly prominent in the technology and industrial sectors, as well as among large-cap stocks. This widespread occurrence hints at potential profit-taking or short-term reversal signals, especially in tech giants and industrial leaders. Following closely behind were doji and near-doji patterns, with 543 instances recorded throughout the day. These formations are classic indicators of uncertainty and potential reversal risk across multiple sectors. The high frequency of doji patterns casts a shadow of doubt on the sustainability of ongoing trends, particularly in the red-hot technology and artificial intelligence sectors. Traders should be on high alert for any confirmation of trend changes in these areas. Bullish and bearish engulfing patterns made their presence felt with a combined total of 405 appearances. These powerful reversal signals were especially active at key market swing points, indicating aggressive capital rotation near critical support and resistance levels. The homebuilders sector, in particular, saw notable bullish engulfing patterns in stocks like Liner, which experienced strong momentum following positive investment news. Other recurring formations included harami patterns, both bullish and bearish, totaling 402 instances. We also spotted 63 hammer patterns and 41 shooting stars scattered across various sectors. These diverse candlestick formations paint a complex picture of market sentiment. With pockets of bullish and bearish activity coexisting in a delicate balance, let's take a closer look at some sector-specific highlights. In the technology and AI space, we observed a high concentration of doji and engulfing patterns. This suggests a fierce battle between investor optimism and sector volatility. Several large-cap names in this sector are showing cautionary signs of topping, which could signal a potential pullback in the near future. The energy and industrial sectors displayed interesting dynamics, with bullish reversals leading commodity-driven momentum. However, the presence of hanging man signals hints at a possible slowdown on the horizon. Traders in these sectors should remain vigilant and consider tightening their stop losses to protect recent gains. In the financial sector, bearish engulfing and bearish harami patterns proliferated, implying distribution and potential weakness. This sector saw a market capitalization change of -$15 billion, with a 2.3% decrease overall. The bearish sentiment was particularly strong in mid-cap financial stocks, where we saw a cluster of bearish engulfing patterns forming around 2:30 p.m. Eastern Time. Moving on to market capitalization trends, we noticed distinct patterns across different cap sizes. Large-cap stocks were dominated by hanging man and doji signals, especially among tech and industrial giants. This suggests that the market leaders might be running out of steam and could be due for a correction. Mid-cap stocks showed a higher frequency of bearish, engulfing, and harami patterns, implying trend exhaustion in this segment. Small-cap stocks presented a mixed bag of doji and harami formations, with occasional hammers indicating speculative support at lower levels. The technology sector, which led last week's rally with an impressive gain of almost 8% and a market capitalization change of $57 billion, showed signs of consolidation today. Software and IT services, subindustries, which were the main contributors to the sector's recent growth, formed several doji patterns throughout the trading session. This indecision could be a precursor to a short-term pullback or a pause in the uptrend. However, the sector has strong momentum over the past few weeks suggests that the positive trend may continue in the near future, with the potential for new highs if bullish sentiment prevails. In the basic materials sector, we observed moderate growth, with selected materials stock leaders like Newmont and Agnico Eagle Mines posting strong gains. The overall sector market cap moved positively within the day, reflecting ongoing demand in core commodities and industrial resources. The sector saw a 1.2% increase, translating to a market capitalization change of $9 billion. A bullish engulfing pattern formed at 11:45 a.m. Eastern Time, indicating a potential reversal of the previous short-term downtrend. The consumer discretionary sector displayed a mix of bullish and bearish engulfing patterns, suggesting heightened volatility and divergent performance among individual stocks. The sector as a whole experienced a modest gain of 0.8%, with a market capitalization increase of $12 billion. Notable bullish engulfing patterns were observed in e-commerce and home improvement retailers around 1:15 p.m. Eastern Time, potentially signaling renewed consumer confidence. In the healthcare sector, we saw a prevalence of doji patterns, particularly in pharmaceutical and biotechnology stocks. This indecision reflects ongoing uncertainty surrounding healthcare policy and drug pricing regulations. The sector remained relatively flat with a slight decrease of 0.2% and a market capitalization change of -$3 billion. However, a cluster of hammer patterns formed in medical device manufacturers near the closing bell, hinting at possible support levels and potential buying opportunities. The utilities sector, often considered a safe haven during times of market uncertainty, showed a higher-than-average number of bullish harami patterns. This sector gained 1.5%, with a market capitalization increase of $11 billion. The formation of these patterns, particularly in renewable energy companies around 10:30 a.m. Eastern Time, suggests that investors may be seeking defensive positions amidst the broader market volatility. As we conclude our analysis for September 4th, 2025, it's clear that the market is at a critical juncture. The abundance of hanging man and doji patterns urges traders to watch for signs of reversal and increased volatility across multiple sectors. While sentiment remains cautiously bullish, technical confirmation is key before committing to new trades, especially in extended sectors like technology and industrials. The day's trading activity was defined by the interplay between the hanging man and doji candlestick patterns, indicating both overextension in major rallies and indecision about future direction. While bullish engulfing reversals were noteworthy in select industry groups like home builders and basic materials, the overall technical landscape suggests that traders should proceed with disciplined strategies, relying on confirmation and robust risk management practices. As we look ahead, keep a close eye on key technical levels and watch for follow-through on today's candlestick formations. Remember, in the world of technical analysis, context is king, and today's patterns are just one piece of the larger market puzzle. Stay tuned for our next update, where we'll continue to unravel the mysteries of the markets through the lens of candlestick analysis. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.